Hey traders, we are back for another weekly technical outlook video. I'm Cristina Bartanidu, market analyst, and at this video I'm going to break down dollar yen, pound dollar, and the US 100 as known as the Nasdaq 100 index. Well, the calendar includes US CPI inflation figures and UK GDP growth data due on Wednesday and Thursday respectively. But perhaps trade talks between the US and China could cause more volatility as the two sides are negotiating trade terms for the second consecutive day in London. Today's talks may include sensitive topics on rare earths trade and technology, so perhaps we may get some important headlines there. But let's see what the technical signal suggests first. Then let's first have a look at dollar yen. We can see that an interesting and encouraging double bottom pattern is developing near the 142.40 region over the past couple of weeks. Unfortunately, Friday's non-farm payrolls report couldn't help the US dollar despite jobs growth surprising to the upside. Wage growth also rose faster than expected, but perhaps negative revisions in previous readings suggested that the labor market is decelerating. So let's see whether US CPI inflation figures could boost the US dollar this week. According to forecasts, analysts expect a slight pickup to 2.5% in the headline inflation. The core measure could move up to 2.9% year on year. So that may suggest that inflation perhaps is reheating. And if that proves to be the case, if the data rises faster than expected, we may see the pair finally climbing above the 144.40 key resistance territory and testing this important resistance trend line that comes from January's highs, currently seen near 146. A break above this region is needed to officially confirm this bullish double bottom pattern and therefore cause a more exciting rally, probably towards the 148.63 territory where the 200-day EMA is located. The 38.2% Fibonacci retracement of this down is also within the same region, so definitely that area may attract attention. Now, if the data surprise to the downside, perhaps that could add some pressure on policymakers to cut interest rates earlier than expected. According to forecasts, futures markets, traders don't expect any rate cuts during the summer. September could be a possible month for the next policy move. So let's see whether inflation figures could endorse the case of a September rate cut. In this case, we may see dollar yen moving lower and testing again the support trend line near 143. Perhaps the bottom of this bullish double bottom pattern near 142.40 could also ease selling pressures. If not, then perhaps the price could drop towards the 140.40 and 140.90 T constraining zone where April's lows were registered. Then if selling pressures continue, bringing this broad downtrend back into play, then the next stop could be near the 138.90. There is a long-term, almost flat trend line coming from December 2023. That line is around the same location. And if we look at the technical signals, well, it seems that downside risks are still in play. We can see that the RSI has yet to climb clearly above 50. The stochastic oscillator is also almost very close to its 80 overbought level. So that suggests that perhaps some caution is still in play. Now looking at pound dollar, well, unlike dollar yen, here we have a bearish pattern. It seems that the pair is forming a bearish double top pattern with a neckline near 1.3450. If we break below this threshold, we may see more selling. We can see that the 20-day exponential moving average is also within the same region, so failure to hold here could pressure the price towards the next support territory near 1.3250 if the 50-day EMA fails to hold near the 1.33 level. Then slightly below that, this trend line over here, which connects the lows from January 2025, could be crucial near 1.3175. A violation here would signal a bearish trend reversal, likely causing a steeper decline towards the 1.30, 1.2970 territory. And let's see whether inflation figure, whether UK GDP growth figures could cause volatility on Thursday. According to forecast, inflation GDP growth figures are expected to ease a bit. Basically, on a monthly basis, analysts expect a slight contraction year on year, and the 3-month average measures could hold stable. So it seems that that the second quarter is facing some weakness, could face some weakness. The data are for April, so a negative surprise in the data may suggest that the second quarter started on weak momentum. Nevertheless, I think that the figures may not be such a big market moving event since inflation in the UK is still comfortably above the central bank's 2% target. It's above 3%, around 3.5%, the headline measure. So it seems that the central bank may have difficulty in cutting rates further, especially following the latest spike in CPI inflation figures, which are currently at the highest level in a year. So I don't expect much volatility from UK GDP growth figures unless there is a huge surprise. Technically, though, we can see that the risk is skewed to the downside, so the technical indicators are weakening. So downside pressures might be more likely than upside ones. However, if the price manages to hold above this key support trend line over here, which is still under examination, just around the 1.35 level, we could see the price retesting the 1.3590 region, where the price posted a double top pattern. There is a long-term resistance line from July 2023 passing from this territory, so that could be an important region to watch ahead of the 1.3675 area, where another key constraining line is placed. Then above that, the 2022 top of 1.3747 may not be ignored, and then if we successfully overcome this top, the next resistance could come near the 1.3930 region. That's where this tentative, that's where this key constraining rising line from January is placed. Now, finally looking at the US 100 index, we can see that the price is still trading marginally below the all-time high of 22,236, just below the 22,000 psychological mark as well. Probably traders are waiting more news from the trade negotiations in London. If they get some encouraging signs that China and the US are approaching a deal, that could boost sentiment, likely pushing the price above the key constraining zone of 22,037 and 22,236, and probably towards the next barriers in between 22,800 and 23,000 psychological mark. There are a couple of key constraining lines here, and then above that, the rally could stretch as high as 23,680. That's where this tentative resistance line that connects the highs from July 2024 and December 2024 is located. Well, however, if we look at the technical indicators, we can say that the price is trading within overbought zone. We can see the RSI, the stochastic oscillators, hovering near their overbought levels. So that signals that it's a warning that perhaps upside pressures might be limited in the short term. So if the price holds near the 22,000 psychological marks, perhaps we may see a reversal and a retest of the 20-day exponential moving average at 21,440. A break lower could drive us down to the next pivot point near 20,800. And then the 200 exponential moving average could support the market near the 20,425. Failure to rebound here could send stronger bearish signals, could reverse this upward pattern, and then perhaps more selling could follow towards the 19,540 region and 19,740 territory. So that's everything I wanted to share with you guys. Thank you for watching. I hope you find my analysis insightful. If you did, please don't forget to give a thumbs up to this video and subscribe for more updates. We'll be back soon with more market analysis and, of course, fresh news. So thank you for watching, and we should have a great trading session. Bye-bye for now.